My name is Tim Allen. I'm the director of the Firoz Lalji Institute for Africa and also a professor in development anthropology here at the LSE. And I'm very pleased to be here to welcome our panel and our moderator, Luca Tascini, who's going to introduce the other members of the panel. And today they will be exploring and critically evaluating climate finance. And I'll now hand over to Luca.
Thanks a lot. Thank you very much. Thank you all for being here. Pleasure to be here and a pleasure to introduce our two panelists, Bogolo Kenewendo and Annet Nakyeyune. Bogolo is a global economist and strategy advisor. She's been also serving for the Cabinet Ministry of Investment, Trade and Industry and a specially elected member of the Parliament of Botswana. And she's also an Africa director and special advisor of the UNFI level climate champion team. And she's also a member of the WEF, the World Economic Forum. And Annet, she's a climate change specialist at the International Institute for Environmental and Development. Most of you probably know him as IIED. She worked for a number of different regional agencies in Eastern and Central Africa and international organizations. And prior to joining IIED, she was a lecturer in the Department of Development Studies at Makerere University in Kampala. So I would like to start with a brief housekeeping information. So for those of you that are on Twitters, please use the hashtag LSE Festival. This is today's event, hashtag, the formal one. I would like also to ask you, please put your phones on silent. I would like you to not disrupt the event. The event is being recorded and will hopefully be made available as a podcast, subject to no technical difficulties. As usual, there will be the chance for you to ask questions to our panelists, to both Annet and Bogolo. For the online audience, you can submit your questions using the Q&A feature. Please, where possible, include your name and affiliation. And for those of you here in the theater, I will let you know when we will open the floor for questions. So I would like to ask you, please raise your hand. There is a microphone roving around. And again, please state your name and affiliation. And I will try to ensure a wide range of questions, both from online and in the audience. Okay, so I have a set of questions. So if it's okay with our panelists, I would like maybe to kick off with you, Bogolo. So, as a former cabinet minister and a UNI level climate champion, I would like to know if you can share the reflections about the past COP27. Did the conference give you hope that we can make positive changes? We've been talking about changes, so do you think that the COP27 provides some hope for positive changes before it's actually too late for climate crisis to involve all of us?
Right, well, good afternoon, everyone, and thank you, Luca, and everyone for having us. I think that there were good signals coming out of COP27. First, I think the road to COP27 was different, particularly for a lot of African participants. So the Egyptian presidency started COP27 with this moniker of an African COP, of a development COP, and then we had to figure out what that actually meant, and we would ask them quite often, what does that actually mean for Africans? And so going to COP, the conversation was, how do Africans show up at COP? How do they lead their narrative on issues that they care for? And then what is the call to action for the world to join in delivering on the priority areas for the continent on climate action? So it was great to see some of those issues coming up at COP27. So the signals for change or for some sort of progress for us at COP was this new strengthened narrative around climate positive development and what a green development pathway means for the continent. And most recently, we've had President Ruto follow on the push that happened towards COP27. And then, of course, having the loss and damage on the agenda, loss and damage fund on the agenda. After many discussions, this was also a very good signal to that. At least we are recognizing some of the issues that need to be dealt with. Don't ask me how things are going at Bonn at the moment. But the other issue was a very strengthened, not just narrative, but action, particularly from non-state actors around adaptation and resilience. And I think this really mattered, particularly for the continent and developing countries, because adaptation and resilience is a big issue. Currently, African countries are financing adaptation and resilience through debt instruments and non-concessional lending, and they've become a big burden on fiscals and other things in the continent. So we've now morphed into the space of climate action and what the financial infrastructure actually means, and we are seeing the culmination of all those conversations and signals coming out of COP27 being pushed through the Paris summit that's about to happen, the New Partnerships for Finance, I think it's called, summit, and then of course later on the Africa Climate Action Summit and many others that are really based around the key issues that were pushed, including MDB reform.
Thanks a lot. And do you think that those conversations and initiatives are actually coming to fruition? Do you think that at the moment we have existing climate finance institutions are sufficient and enough actually to develop that green development program that they discussed during COP?
So I'm an optimist.
Okay.
But I'm cautiously so, because obviously we have the history around, big pledges being made and then no one following up, or that we come to an agreement and it takes long to establish funds. And I think this is where the LMD is finding itself stuck on. But I feel like there is a re-energized sentiment around the need for us to really act, because we know that there is no other planet, and that everybody needs to take responsibility for climate action if we are to reach any of our long-term climate goals. But it is still quite differentiated. I mean, there are different arguments at the moment of who really needs to be taking responsibility, how do we take responsibility, but I am hopeful that the issues we will have, particularly around unlocking finance in Paris, will help to move the needle further, because action, particularly in developing countries, really will be moved through unlocking of green finance.
Thanks a lot. Annette, what's your opinion? Do you think that at the moment the existing climate finance institutions are sufficient, or do you think they need to be reformed, improved, expanded, especially in the context of adaptation and resilience?
Thank you. Lucas, could be a mix of all those things. I like to share the optimism, Bogolo's optimism of things can get better, but I wanted to speak about how disconnected the financial climate finance architecture is to the local African needs. There is a missing middle where, for example, it's good to have a bigger resource envelope for climate finance, but what are we doing with already available finance? Is it doing what it is supposed to do? Are we achieving what we are supposed to achieve? Because when you look at how the climate architecture is organized, you will find that it's so alienating for national governments in Africa, subnational governments, and then local level. Yet we know that climate action takes place at local level. This is where the challenge is. But rarely do you find that linkage. So how do we create a linkage? How do we create these links in the system, in the climate finance system, the value chain. Who are these actors? How are they linked? Where are the disconnections? How can we fix those connections to ensure that climate finance actually goes down to do what it is supposed to do, to build resilience, to build, to support people to cope better with the changing environment. So to me, the challenge I see with climate finance is in how it is structured. The structure of climate finance does not support climate action at local level. There is a disconnect. So however much we improve, we increase the amount of money we have for climate finance, but when we have not solved that disconnect to ensure that actually sub-national level actors, local level actors participate in making decisions about climate finance, I don't think we stand a chance of achieving resilience and adaptation. But also secondly, you talked about initiatives, like that question had an issue, an aspect of which initiatives you look at. I think to me, because climate action takes place at local level, so any interventions that are going to cause change must involve local communities. And how do we do that when climate change is so disconnected from these local levels? There are lots of challenges, transparency, accountability, and all that, and at all levels, not only at international level, even at national level, because statistics show us that about only 18% of climate finance reaches LDCs, and out of that, only 8 goes to local level. So already that shows there is a problem. So how do we solve that problem, even before we think about increasing the resource envelope?
I like a lot the way you actually phrasing that. So climate action happens locally, so change actually happens locally, right? So you mentioned already, you are hinting what's needed, but again, to reduce that disconnect, actually to create a connection, do you think is more of there's more need in terms of institutions or different forms of climate finance? Do you have a view on that? Like, as it informs, I mean, structure of financial agreements that are involving local authorities or actually even people on the ground. And, you know, in my imagination, I'm already thinking in terms of credits. There's a lot of conversation about offset credits, carbon credits, that in principle should be issued by, you know, local communities. Do you think that is a possible form of a financial instrument that could help climate action to happen locally? Do you have a view on that?
I think for climate action to support local response, we'll need to shift a lot of power back to the communities in terms of making decisions on what is the priority, what are the climate risks, how can they be supported to co-create response options that work for their contexts. I think it's about what works where. Homogenizing Africa remains a challenge. What can work in Botswana will not work in Uganda because these are very different contexts. And so I think these funding mechanisms or instruments are going to be looking at contexts in Africa, where we work in interventions, what works in Uganda, and then you design funding models that fit Uganda's context, patient, flexible funding schemes that developing countries can handle. For example, locally led adaptation initiatives. If, for example, we could, climate financing could support such initiatives, devolving funds to local levels to ensure that climate action starts from the bottom, then moving up. But currently, the funding architecture, money is up somewhere up there, and big guys can only have access to that money, and then the chain continues until when some drops to local level. So I don't know what Bogolo can add to that, but in terms of how the local level, how local communities can mobilize, can be part of this big voice to influence, to unblock climate finance.
Right, but I think that she started a very important conversation around the need to reform the international green financial infrastructure. So I think where we sit at the moment is we have two choices. It's either we create a new, innovative, efficient, equitable green financial infrastructure, or we reform, drastically reform the current infrastructure, and particularly around MDBs and how we work on credit enhancement through MDBs and crowding in private sector financing. And that is really where the issue is. And one of the stats that she mentioned around that the continent only attracts about 18% of general green capital, even though it's been exponentially growing. Yeah. There's clearly a bias in the monetary system and the financial system that needs to be dealt with. And you know, the issues around, one of the challenges that we keep hearing often, and I think this reflects to communities, is that there is no pipeline of projects to invest in to allow for finance to flow to communities and to developing countries. And we know it's not true. There are projects exist, but they are not packaged in a way that, say, London-based
risk profile.
London-based actors would respond to. So there is a project origination problem, packaging of project at inception that speaks to the kind of investor profile that we have in London or in New York and so forth. And you know, we need to challenge the way that the market thinks about developing countries. That includes not only risk as we know it, but also perception of risk in developing markets. And we see that every time a community tries to set up, say, a carbon project. First, there are issues of verification, then there are issues of startup investment in just getting the project going, because, well, there is high risk in these communities. There's political risk, there's product, the risk of that the project will not finish. And we know from experience through Afreximbank, from AFDB and others that are actual players in Africa, that the risk is much lower than it is perceived to be in London.
Yeah. So do you think what does that reflect? The typical traditional perception of geopolitical and regional type of risk?
It's geopolitical issues, but it's also just, I find that there is a lack of appetite to actually invest in learning how things work in other markets. Just 2 weeks ago, there was the Net Zero Summit here in London, and had a conversation with somebody who manages large pension funds, and asked him which emerging markets they invest in. And he said, no, none. None, because we do not work with anybody in those markets. How are you going to work with people in those markets if you don't even try? And he said, no, because political risk is too high. Yeah. Where? Yeah. Let's be specific. Where is the political risk too high? Botswana is very stable, the governance is proven, longest running democracy in the continent, and yet when you look at the investment attraction in the continent alone, regardless of where capital comes from, it's very low. So there is nothing to do specifically with the fact that we are politically higher risk, but just biases in decision making against African countries maybe, but I think it's generally around developing markets, less Asia.
Right. Can I go back to this idea of reforming and what's needed to be reformed, or perhaps even elaborate on what is the new type of agent, if not even agencies, that are needed actually to, not necessarily stimulate, but finally actually channel through that type of investment that is truly needed, and avoid that bias that typically is the typical bias that you just described so far.
So I think that the institutions are there. Afrexim does business in Africa. I'll keep going back, and I know not homogeneous, but for the simplicity, so Afrexim does business in the continent, and they have invested in some spaces and projects that are deemed to be high risk, and yet they have very low default rates. And very proven high returns on investment. AFDB, which is also investing heavily in the continent, not only for public sector-led projects, but also private sector as well. I think that institutions around the world need to create a risk-sharing profile. And I know there's a conversation at the moment around GEMS where there would be a risk-sharing, data-sharing, risk-sharing space where, developing markets, financial players can share exactly what the real default rates look like, or political threat, or any of that sort. And then we know that within the World Bank and IMF and others, there has been space to stimulate private sector players. So we could revise and reform, say, policy-based guarantees. Now there's a conversation around introducing FX guarantees to lessen the risk associated with exchange rates and allow private sector to play in that space. And then another one is that our MDBs and some supported IFIs shouldn't behave like commercial players. Where they start projects, they should be aiming to distribute those projects to the private sector to allow the capital spread across many projects, and not just be have finance be stuck in one project because it is commercially viable. Where things are commercially viable, they should be moving on. And I know that this is a whole other conversation that we can have.
I suspect the idea of the European Investment Bank, I'm not really very differently.
I know, we've had these very long discussions, but I think there is something to say here about origination to distribute instead of origination to hold. And there are many other reforms that we can speak to that are specific to the MDB space. And one of them is recognizing that climate finance should be extra concessional and should include middle income countries. And because the threat for climate doesn't think, oh, but you are now middle income. The issue remains the same, that African countries are financing adaptation and resilience through debt instruments. And they shouldn't have to. Because as we all know, the argument is we didn't cause this problem. Why must we finance it and not be able to finance education at the same time? So the proposal on the table is that the extra concessionality of MDB finance should be around 1.5%, which reflects the 1.5 degrees.
Well, thanks a lot. Annette, do you have actually a view on what type of, again, agency or agent, the reform that you think are actually necessary, but in particular, again, to stimulate more action locally on the ground? What do you think is working? And also going back to what you were actually saying earlier, I would be very keen to hear if you have some lessons in terms of what really did not work. You were talking about we need to use a lot of different elements that work in different regions or different states. Anything that actually never really truly works and cannot work across the continent.
Yeah, I think, that's quite a broad one, but I want to go back to what Bogolo said, talked about political risk and the bias that it's associated with. I really want to say that there is some truth in a claim that there is political risk in most of African countries. Yeah, they are very stable countries like Botswana and a couple of those, but the truth is, yeah, there could be some issues. So really, this climate finance innovation system is a complex one. So you find that there are challenges at all levels, challenges that have to be navigated. And you don't find angels and devils. There's a mixture of everything everywhere. So it's that complexity that we have to have at the back of our mind. For me, speaking about reforms, I really want to strongly believe that we can find innovative ways of ensuring that climate response is informed by the people that are affected most, that they contribute to designing adaptation actions, that their voices are part of decision-making processes at local level. There are these approaches like whole of government, whole of society approach, where people, different categories, different sets of people contribute to decision-making from bottom up. But of course, this really requires time and a lot of investment in terms of time. Sometimes project life cycles don't permit. There's a lot of learning and testing things out. You also asked me about what can't work everywhere. I'll give you an example. In Uganda, for example, the innovation cook stove climate finance. I have read reports, published papers where they give 100% commendation for the outcome of those interventions, but the truth is, the reality is so different from what published papers say. So to me, this brings in the question, like, do we learn anything from these interventions? Do we ever learn? And if we don't learn, so when are we ever going to get it right in terms of ensuring that actually climate response does what it is supposed to do to increase capability to adapt and to be resilient economies? So evaluation of interventions, the learning that takes place, who frames these learnings, who shares the learning, and who's learning and who shares the learning. So if we distort, for example, the lessons from our previous interventions, so how is it going to inform the future? Because the truth with climate change is we are going to get things wrong because nobody knows with ultimate precision what the future holds, because of course it's a changing environment. It's a changing world. But what is important is, are we learning as we go so that we can drop those things that don't work? We can remodel, we can co-create, we can co-design with communities. I think to me those reforms work. But also when you look at carbon credits, for example, that have been applied in Africa, in most of Africa, voluntary carbon credits, you will find they are so unreliable because these multinational companies, it really just speaks about their willingness to invest in activities that improve their environment, sociability, governance. If they don't feel so much like that, they will not pay the money. And that is where most of African carbon finance, big part of it came from. Very unreliable. But also, I don't know which lessons we learned from earlier initiatives like the PACE, Payment for Ecosystem Services. How well did it do? But I remember what I knew from my work back then was that the cost of production at the supply side was higher than the money that came in, people keeping those forests and all that. So it wasn't sort of profitable for farmers. And so it's a host of all complex issues around that, really.
Thanks a lot.
Can I give a quick example?
Of course, please.
So around the concept of bringing in communities and different private sector players, and if there are any models to look at. The reason why I'm optimistic is because we actually see that there are pockets of innovation happening, and one of them is called a Vumbusi Fund. And I was just looking through my phone trying to find these notes. But they have created a land restoration and agroforestry fund and a project that will operate in 34 African countries. And the model that they have used is, yes, there's a guarantee, but philanthropic funding is leading this. And then governments are involved, but in particular, they are working with communities and even smallholder farmers to get the project off the ground. And they have a very ambitious target of exactly how much they need financially. But we've started to see a lot of movement around Vumbusi. So if you're looking for the project, it's called the AFR 100. Co-sponsored by NAPED and the AU and WRI. And there is a third element to that innovation, which reflects to the participation in the carbon credit space. And I think just the model of how they've come up with Vumbusi itself, it's something to look at, because there's MDB catalyzing private sector financing, but there's also philanthropic that is there, acting as grant to enable the participation of communities in a project that is going to restore thousands of hectares of land in the continent. So it's not only about restoring the land, there's agricultural aspects in there, and then there's carbon credits, so different layers of participation in the market.
So, and do you think this could be, going back to this idea of a possible instrument, financial instruments, do you think that actually carbon credit offsets could play a bigger role going forward, given the demand that is probably coming from private actors that need to somehow decarbonize, especially in developed countries? And is the fund that you just mentioned the only form that actually guarantees a close connection with the local community? Or because we're going back to this idea of scalability, right? I suspect that as soon as you have to deal with the local communities, scale potentially can become an issue.
Right.
So how to speed it up?
So it's not the only project. There are several in the continent, but also some in Indonesia and the Asian markets, where you see trilateral participation from financial players. But I thought the Vumbusi one would be a good example to give, because they have over 34 African countries and have the participation of smallholder farmers, starting with 5 trees. So I think that works towards some form of inclusivity. So I am a believer in the carbon market space. There are 2 issues at the moment around integrity and quality of credits. Integrity of both the producer and the buyer. What actually is greenwashing related to African credits and others? How do we ensure the quality is the same? The issues of land use while working on a carbon project, all issues that we have to deal with at the moment. But the one question that I keep asking ICBCM and VCMI and others in this space, Gold Standard, that have been working in this, is exactly what determines quality of a credit. And I think we need to have that conversation, particularly when it comes to nature asset credits and old growth forests, because this is where we hit a real snag when the market recognizes additionality. And I've said the only reason the market recognizes additionality is because the market was created in a European setting and didn't particularly think about old growth forests or long-standing nature assets that have already been doing the work that we need new forests to be doing. So we need to think about that asset class, but we also need to think about the biodiversity that is included in that asset class. So is quality reflective of the additional benefits associated with an asset, or it's only thinking about the credit itself, which then brings us to another subject matter or a product of, should we start thinking about biodiversity credits, or should we also start thinking about resilience credits, where some energy projects go beyond mitigation but start to get into the adaptation and resilience space. So we start to really unpack this issue of quality and the ripple effects and co-benefits it generates in the community.
Thanks a lot. Annette, I'm going to ask you the last question, and maybe you open the floor to the audience. Again, related to this evolution of credits. So you mentioned payment for ecosystems. So we try to actually put a price on something that is related to ecosystems. There is a relatively long-ish story about avoiding deforestation, right? The REDD+ in Africa and also other continents, especially South America. And now we're going towards biodiversity, even jumping basically from credits to biodiversity.
Yeah.
And you mentioned about lesson to be learned. What is there anything that we learn that we shouldn't probably do, especially in the context of biodiversity, where quality becomes even potentially a bigger issue? We don't have, as of yet, a clear definition of what is biodiversity. Anything that we can try to stay away from in terms of lesson learned from the credit markets on offset credit so far in the African continent?
I think for biodiversity, maybe the precaution should be about on-farm, there is on-farm and then off-farm, the diversity of biodiversity itself and where biodiversity is found, land ownership issues in Africa and how that can actually trigger another host of challenges like land grabbing because of shaky regulation and frameworks in Africa. So for me, I would be cautious moving from carbon credit to biodiversity credit. I would be very cautious about such things like how might it trigger other challenges if, for example, we looked at landowners versus those that don't have land, and those who have money and can buy off land and then making people landless. So
I understand.
yeah.
So that's probably something that we should. There's already, I think, an issue like that in Scotland already, where because there is restoration of peatlands and basically creating land scarcity. Thanks a lot. So perhaps we can open the floor to some of the questions. Maybe from, have you got already a few questions? Okay, and is the mic, okay, perfect. Could you please raise your hand if you have questions? And again, state your name and affiliation. And while you may be thinking about a question, maybe should we start with one online, if you don't mind?
The first question is from Banu Deer, and the question is, the progress at COP27 appears to have been undermined by the command that the fossil fuel agenda has for COP28. How do we get things back on track for real benefit to African nations in the future?
Should we take several? I think so.
Yeah.
Yeah.
Do you have a?
So-
And in the meantime, if you can please just raise your hand. Thank you.
Next question is, how could the climate vulnerable and conflict-prone countries in the Horn of Africa help to attract capital investments in green infrastructure?
Should we go for our third one, maybe?
Yeah. And the third one is, how do you think accreditation requirements by primary climate finance mechanisms, such as the Green Climate Fund or the Global Environment Facility, affects access to local actors?
Thank you.
That's a very good question. Yeah, I'm dealing with that. Should I go ahead?
Yeah, please.
Okay. So GCF and Jeff at the moment are being challenged for being very unresponsible. There's a community project that I've been following for a while now. They have submitted their request 2018, and they still haven't received their financing. I mean, this just speaks to how inefficient some of our adaptation funds are, and they are missing the mark in terms of delivering on the roles that they were supposed to deliver. While GCF and GF are examples on the inefficient players that were created, I think we can also think about CIF, the Climate Investment Funds, and how more efficient they have proven to be, because they work with several MDB players around the world, and they run disbursements through AFDB and others in the continent that are much closer to projects. And I think in order to really make sure that you reach communities, it's best that you have local financial players, accreditation, who are much closer to the projects than trying to run something out of South Korea, which, first of all, it's very far. But I know that GCF in particular are planning on opening an office in somewhere. I almost said it, in somewhere in the continent. So we're hopeful that that will improve the efficiency. But then there's just a general need to reform the process of submission and evaluation, because it takes too long. And then for progress, for it to not be undermined, I think the bond conversations at the moment are actually reinvigorating some of those progress points. LND, adaptation, so the Sharm el-Sheikh adaptation agenda, and then issues around climate positive development. Obviously, things are not going well at the moment. There's no agreement on the agenda, we know that. But I think the right issues are back on the table. And just because those right issues are back on the table doesn't also mean that we shouldn't really be looking at the issue of oil and gas, and also discuss if the oil and gas companies really should be at the table. Do we think that we can make progress on climate action if they are not at the table? Is it better for them not to be at the table, or is it better to have them at the table so that we can challenge the status quo? And I would like to leave that one quite open-ended. And on the Horn of Africa, I don't think it's just the Horn of Africa. Last year we had a test case out of South Sudan. Many countries are submitting the NDCs. Some of them are contributed to through communities. But what happens when there are no governments submitting NDCs, or active governments submitting these NDCs through community engagement, where there are no communities that are in a stable position? And it's a really tough environment to deal with. I know that there are some crisis management groups at the moment that are non-state actor that are engaging on this process, trying to create community-specific projects to respond to crisis spaces, countries, communities.
Yeah, for me, I think I'll start with the third question, how accreditation affects local actors. It's really a very important question. And when you look at GCF, for example, I think it's about only 4 organization actors in Africa that qualify for that. And when you look at, for example, projects that can be supported by multilateral development banks, they are unlikely to be smaller projects at community level. They are looking at projects that really have greater impact at scale. So you will find that still smaller actors at subnational level especially, and local level, still can't access climate finance. So that is what I talked about, that missing needle, connecting subnational actors and local actors to climate finance. The accreditation process, the qualification process, the criteria, what is needed to qualify for that funding. most of these subnational and local actors don't have that, and I think it's important that we raise our voices wherever we can to see that climate finance, there are packages that are patient, flexible to support smaller actors that may not have bigger projects, very big projects, but have impactful projects at smaller scale. About the Horn of Africa, I think like Bogolo said, when you have instability, it does not only affect climate planning, because I think where we are moving now, we are moving towards integrating climate into national planning and everything, embedding climate into national planning. That's what I think most of Africa are looking at. So when you have political instability, definitely that presents a political risk, and not only for climate action, but for every other thing. So that becomes really difficult.
Annet, can I ask you a question, and then I'll come, but very quickly. Again, forms of instruments. Do you think that middle space can actually be populated or help to be populated via insurance instruments? So if there is an insurance that actually facilitate or reduce any sort of perceived, as we were discussing earlier, risk from middle and small potential credit providers, do you think actually that middle space could be actually become smaller? Do you think there is actually a role for insurer to help small offset provider to get to that level of basically supplying their offsets?
I'll probably answer that by giving an example of a project that IID is doing. It's called LifeAir, Less Developed Countries Effective Initiative for Effective Adaptation and Resilience. So in that, LDCs have an ambitious agenda of driving climate action for a resilient future, and everything is done by them with IID supports in terms of coordination, but with a hope that in the future, maybe 5 years, they will take over everything. They will take up management of that fund, and many governments are putting money into that initiative. So what they are doing is, for example, to deliver funds, it's difficult. Sometimes you can't deliver money directly to subnational and local levels. So what we do, countries identify fund management kind of delivery mechanisms through that, that can support with channeling finances that have higher due diligence and compliance to at least standards, because that is also important to adhere to standards and to reduce really risk. So insurance could be one of that that could actually help.
Thank you so much. If you could please just state your name and affiliation. Thank you.
Does this work automatically?
That's it. It's on. Otherwise I can also, can you all hear it clearly?
There's also people at, yes, it's working.
Okay, sorry everyone. I'm Julius, I'm a postgraduate student here. Thank you first of all for the helpful conversation. I'm an economics and finance amateur because it's only at the margins of my studies. But I kept wondering, as you were talking about different levels of participation, different forms of sustainability, I kept wondering about how you have most of the finance now, or most of the actors which are now determining green finance are sitting within the major 90 companies of the world, which are driving pollution, and like companies like Shell offset carbon credits to a degree that they theoretically own 1/10 of land surface on the planet. And I thought about, if we're thinking now about financing climate change, does that mean we would have to think about everything else than financing in the first place? And then that the financing aspect would come from repairing our ideas of who can own how much in the world?
If you're thinking to convert everything in land, is a very good question. While you think about it, any other questions? Yes, please. Can we also collect a few more? Yeah. Thank you. Yes.
Hi, is that working? Yeah.
Yes.
I'm Sasha Abraham from the Climate Change Committee. So I had two brief questions. The first was when you're talking about perception of risk in the continent, which actors you think are well placed to address those misconceptions? So who should be talking about it more and who's likely to have that influence? And then secondly, looking at actual risk, do you feel like there are adequate spaces for investors and product developers to come together to talk about kind of risk elements outside of political risk that could actually have practical steps that could lower the cost of capital? Because it sometimes feels like there aren't direct conversations on that happening.
Thank you so much. And then we get one more there, please. Thank you.
Hi, I'm Zainab Imran. I'm studying development management here. My question is on climate financing. We're aware that there are new instruments which are coming up to help the marginalized communities access these funds. However, we know that they actually don't reach them. So I just wanted to know which instrument you think is most useful in directing those funds towards the marginalized communities. For example, in Indonesia, you have green sukuks now, the Islamic financing, which is very popular now in that country. So which instrument do you think is most helpful in reaching marginalized communities, particularly in Africa and Asia?
Do you want to? You can address them all. You can address the ones that you think are.
All right.
And I would like also to pick a few more questions if possible. Thank you.
Yeah. So let me start with the risk discussion. As I mentioned earlier, I think the problem was I used an acronym. So it's the Global Emerging Markets Database Consortium. That is looking at risk and pulling credit default data across different MTBs and IFIs and DFIs for investment. And so we have put that forward as a proposal to really strengthen or really deal with those issues around perceived risk over and above just political. But specifically really looking at default rates here. And then for adaptation in particular, common databases already exists of climate, but there's been some hesitation, particularly from private financiers to invest in adaptation in the continent. But the Global Emerging Markets Risk Database Consortium would deal with almost all of the issues around risk. And then on structural influence, I was trying to find for you, for example, the AFDB has put forward very detailed proposals of how they can deal with some of those fears from other players, and some of the issues that they've put forward. Of course, it's like MDB and SDR-backed bonds and SDR recycling through AFDB. At the moment, we know that there's a consideration of $100 billion recycling through AFDB. And there's the hybrid capital mechanism that is also currently under review. And then thinking about how ODA, that is climate specific, could be channeled for commercial adaptation, really, not fully commercial, but for adaptation projects within the continent through Afrexim Bank, AFC, AFDB, and others. The Afrexim Bank actually recently announced that they will have a flagship program financed by other international IFIs of close to $300 million in Kenya for adaptation specifically. And then hopefully this will become a project that is scalable across the continent.
Thank you.
And then I'll leave the land one and community to you.
The first one you mentioned, do you want to ask your question again, please? I didn't quite pick it.
Can you have like a very short, brief version of your question?
It was the
please?
gentleman at
Gentleman
the
at the back.
The gentleman.
I think in one line it would be, do we have to think about the conditions that make up financing climate change before we
the actual financing mechanisms.
Think about what first?
Do we have to think about the conditions that make up climate change first before we think about the actual mechanisms of financing?
I think we already know what are the conditions for the climate change that we need to solve. At the moment, we're trying actually to find mechanisms that allow us to get to the solution, basically to reduce, in a way, consumption. Your point was about fossil fuels, right?
Yeah.
To reduce basically consumptions of fossil fuels. And here is about, there's plenty of different options, one of which is actually reducing emission via other offsets. And that's the point of the conversation about credits. We can maybe just take that offline, if you don't mind. Do you want to maybe tackle the last one, please? Thank you.
Our last question on instruments that can be used to deliver climate finance. Yeah, I think it's important for us to think about climate finance delivery mechanisms that can work for different countries. But which climate finance? Because already we have seen that a lot of it comes somewhere, it doesn't come to the local level. So we have also to solve that problem of ensuring that at least 70% of climate finance actually goes to the local level. Because even when we come up with instruments to implement work, because there is so little that goes into doing the actual work. So I think there is also a problem there. But back to that question that you asked, I think devolved climate financing has worked in countries like Kenya, where climate finance is embedded in national planning to local level. Money that comes into government and other different avenues is channeled into the country's national planning process and national systems, using Kenyan systems and Kenyan processes to ensure that the priorities are informed by the people, by the local people at the lowest level, and then plans move up to national level. They start from local level and moving up to national level. So devolving decision-making on climate action would be one way of doing it.
So maybe also something to consider for your research is around the transparency framework. As we're pondering a reform of the transparency framework under UNFCCC and how countries disclose their NDCs, should it be clear what part or contribution of the NDCs was done by communities? Because at the moment, the challenge that has been put to us, the transparency framework, is to create space for the private sector and then to ensure that there are investment plans that accompany NDCs so that there is much better understanding of what the needs are, both on the mitigation side and adaptation side. So I would recommend that you check that and then maybe come up with a recommendation of exactly how that could bring in communities and could change the financial flows.
Thanks a lot. And if you allow me just one last question. Thank you so much.
Can you hear me?
Yeah.
I'm Rafael Sultanov. I'm a Chinese scholar from Kazakhstan, studying here political economy of late development. One of the professors shared with us an article about scaling solar. It was a project in Africa where the World Bank kind of intervened and actually almost undermined the efforts to install more solar panels in Africa. It was kind of a classic case of overselling. So like trying to hide the costs and make solar panels more appealing than they are. So my question is this: are we not seeing this trend where climate change solutions are being oversold in terms of like trying not to demonstrate the side effects or the true costs? Because I think a better strategy would be like everything has a positive side and a negative side, and so would it be not fairer to demonstrate that climate change solutions, yes, they are necessary, but they are not necessarily without flaws, and we need to kind of to keep that in mind as well, and that would be kind of a fairer presentation of what our choices are.
I guess.
Is this the Zambia case?
I don't remember actually.
I think it is. I think it is. The real cost of solar in the continent is based on that a lot of the panels are still imported. Then it brings in an issue of greening industrialization, actually having industrialization policies, and then working on the AFCFTA and investment within the AFCFTA. And I could go into that whole space separately, but I think in order for us to have effective rollout of solar as a solution in the continent, manufacturing needs to happen in the continent. And similarly, with all the other critical minerals, I'm opening another can of worms, but with all the other critical minerals that are needed for the transition, I think we need to have a very clear and deliberate industrialization and value chain development plan for it to not only work for the world, but to ensure that there's development that happens in the continent. Because the components of the solar panels actually come from the continent, then it's made elsewhere and becomes more expensive and unsustainable financially for the communities. So we need to really develop that value chain.
I think what I see from his question and Bogolo's response is maybe actors trying to find a shortcut to achieving desired impact, which can't work because behavioral change needs to work in a certain way. You're not going to hide prices and then stimulate demand, artificial demand. That is not sustainable, and it has happened before. Even in Uganda with improved cook stoves, creating an artificial demand for cheap stoves, there is no demand for that, and in the long run, you're not doing anything. So I think we have to invest in behavior change. People must, behavior need to change, and that is long term now. But with these projects that are looking at really short term timelines and trying to create impact in a year or 2 or 3, it can't work with climate change adaptation.
Thanks a lot. Okay, so I think we reached an end, so please join me to thank our speakers. Thank you very much. Thanks a lot for attending this session. Thank you.